Now let's get down to reviewing activities in the market and some key events that caught our attention this week. I have in the studio Mr. Ambrose Omodion, the Chief Research Officer, Invest Data Consulting. It's good to have you on the program again.
Thanks for having me.
Mr. Ambrose, the elections have come and gone. Corporate earnings are still trickling in. What would you say is investors are looking to do right now, because the market is not looking friendly?
Actually, I would say that I call it a tension between, rates and yield. It's what pressing the equity market as we speak now. After the adjustment of rate by the committee on Tuesday, and also that once you adjust rate, yield in the fixed income market will start looking attractive. And also don't forget that the bond last week we saw the rate of almost 16.5 yield in bond. Well, because also inflation is about 21.91, investors are trying to balance, where should I go? Should I still keep my hope on this earnings expected? Because I tell you, out of almost 120 listed equity, about just 15 have released their audited account for 2022. That means more numbers will know markets are waiting to hit the market. But the thing is that now, what is the yield of those that are hit the market and what the yield of what's expected? That's why I said the tension now is between yield and rate. But the good thing is that election has come and gone. On the part for me, investors should just sit down. For those that are looking for dividend income, invest on this company, especially as all eyes are on the first-year banks that are yet to release their number. That will also shape the market. But don't forget that in equity investment, sentiment is very, very powerful when you are taking position. Now that we're seeing sentiment slowing down because of what? Because of delay result from what? From the first-year banks and other banking the second tier. That is what is shaping the market. But once we start seeing that financial result from the banking side from next week, and being the last week for especially we call it the official deadline to submit your result, we expect that next week we'll see more results hitting the market. That will shape the market again. But as we speak now, that rate and yield is what is influencing the market as we speak.
Well, technically, we saw the market is just a bit dicey. We did see the market cap or the all-share index hitting, almost hitting 56K level. Yeah. At some point, we're actually counting down. I was counting down to it, but it didn't get there. It didn't hit the mark. But we saw pullback because of profit taking from investors. Yeah. Traders are, looking to cash in there. What should traders be doing now? Because it seems like we don't even know what direction to go, because after elections, the market seems to just trend downwards. The profit taking, as you mentioned, is still ongoing. Yes. And also, market is side trending as we speak. And when market is side trending or consolidating, the traders don't benefit from the market. Even the stockbroking firms don't benefit from the market. Until the market is making an uptrend or a pullback before you know what to do. Now the market is on the side trend movement. Every trader is waiting. And for personally like me, I'm waiting the market to pull back. I'm not expecting the market to go up now because I'm not taking position. Traders will expect the market to pull back, while investors are busy mopping up dividend-paying stock for what? For dividend. Why traders are positioned, this market correct, let's jump into the market. And that's the beauty of the market. Also, if you look at the market breadth so far, you can see that we're seeing more sellers in the market than buyers. And why? Because markets have rallied from the month of November to almost before the elections started. And now that election is gradually shifting away from attention from investors, all eyes on how can I invest for dividend? And as I mentioned, that what is influencing the market up and down is that rate and yield. Once we're able to get it right and see that, inflation has made equity market more attractive compared to fixed income, because in equity market, you can make 10% in your yield from dividend, an additional 10% of that will give about 25-30%. That is above inflation. But all the fixed income yield cannot give you above inflation. That means for designing investor, they want to take position in stock that have that 10%, 9%, 11% yield, so that when they make capital position of 10%, 20%, they're already ahead of inflation. Because if you are waiting for the next 364 days for a yield of 9% in a treasury bill or in the bond market, you're going to wait for 364 days. So be more clear, Ambrose, here. So what should investors do? How should they balance their portfolios? If you're saying they shouldn't wait 365 days for a fixed income yield, what would you suggest? How do they balance their portfolios?
No, actually, I told you that we have not seen the banking stock. And most of these banking has between 8 to 11, in terms of yield. That means they are attractive now. And naturally, even when a stock pull back, the yield will go up. And if the company or the bank maintain what they paid the previous year, that means you're even getting a better yield because prices are pulling back. That means the way to go now is the banks that were not seen there, especially the first-year bank, the life of GTB, Zenith Bank, UBA, Access Bank, Fidelity. These are second-tier. But I tell you that this banking stock, as we speak, or less, on what is happening on the global scene. then when they send their result to CBN, but I believe that if a company has done well, CBN will also look at the edge you're done well. They can't control your payout. Before now, we know that there are some banks that when they submit the results, CBN says you can't pay this. You have to bring it down either for one reason or the other. But CBN has come out in the last minute that our banks are healthy. That means our banks are good capital adequacy. They have good cash ratio, liquidity ratio. How also earnings are becoming better in the banking sector. For me, there's no cause for fear for any investor. But it is now done on most of all that are invested in the market. As CBN is regulating the bank, also you, the investor, also should have a way of also seeing what is happening in your bank.
Thank you so much, Ambrose. It's quite interesting what's happening in the market, and we'll see how that plays out, especially with investors still digesting the 50 basis point rate hike by the central bank, and looking at other macroeconomic factors that probably shape, their investments this coming year. We look at earnings. I think there's been a mixed bag for earnings, especially with dividend declarations. It has not been, sitting well with some investors. I can say they're not happy with what they're seeing, but we'll see how the market plays out. So thank you so much, Mr. Ambrose Omodian, Chief Research Officer, Invest Data, for coming on the program and sharing your thoughts with us. We'll pick up some other time and see how investors can really make a lot of returns from the markets going forward. Yeah. Thank you so much. Yeah.